Kia ora, I'm David Chastain with 90 at 9, brought to you by interest.co.nz, because we get everything you need to know in 90 seconds at 9 o'clock, with news that away from the headline political shifts, the global economic signals seem to be dimming further. And first in the US, the widely watched University of Michigan Consumer Sentiment Survey fell in November to its lowest level since July, and by slightly more than expected. This survey reports about 4 in 5 consumers now describe buying conditions for homes as bad, a record on data that goes back to 1978. In fact, mortgage rate rises show no sign of slowing. Meanwhile, giant crypto platform FTX has been placed into bankruptcy, and Twitter's mercurial new boss has warned that it too faces bankruptcy after he paid $44 billion for the firm and then promptly moved to Record. For sure it needed repair, but the toxic way he handled the takeover has pushed it close to the edge. FTX was also hacked. And the spreading tech sector layoffs should be watched closely. The number involved are large enough to impact their overall labour market. And China has labour market issues too. We all know that their economic slowdown is stubbornly extending, and we know that their jobless rate is surprisingly high, with the official level over 5%. But what might surprise you is that their youth jobless rate is now approaching 20%. Normally at this time of year, we report the huge Chinese retailing event 11/11 or Singles Day. It went off as normal, but for the first time ever, none of the large platforms released results, rather saying trading was in line with last year. India's industrial production rose by 3.1% in September from a year ago, reversing a 0.7% decline in the previous month and easily beating market expectations of a 2% growth. But not so positive was an unexpected fall in new car sales in India. They rose more than 9% in September from August to 307,000, but in October they fell to 291,000, and although that's much higher than year-ago levels, the base for both months was weak. In Australia, Sydney's housing auction clearance rate sank to 61%, as almost a quarter of homes scheduled for auction last week were withdrawn. It's a sign of rising borrowing costs and growing uncertainty are biting in the East Coast-dominated residential market. And the US Treasury 10-year yield starts today and starts the week at 3.81%, and the price of gold will open today at $1,771 an ounce. That's up $5 from this time on Saturday, but down $4 for the week. And oil prices start today 50 cents firmer at just on $88 a barrel in the US, while the international Brent price is at $95 a barrel. And the Kiwi dollar will open today at 61.2 US cents. For the week, it's been revalued by 3.1% over the past month. It's an impressive 9.5%. Against the Australian dollar, we're little changed at 91.3 Australian cents. And against the euro, we're also little changed to 59.1 euro cents. That all means our trade weighted index starts today at 70. This broader measure is up only 0.4% for the week, but up 5.4% for the past month. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chastain. That was 90